Well, the short position didn't quite work out. That's the rub. We made on the long. We tried to go for a speculative short, make a bit of money on the downside, but we did get a valuable lesson, common problem which occurs to many traders. So let's look at where we were and how we've ended up. That's how we ended up for the day. This is where we were. It was around here when we went short. It did go right for a while. It dropped a bit, and you can see down there. And that all looked fine. As you can see, the MACD was moving lower, the price was falling, then the stops got hit. What happened was, in the next period, price rising up and up and up, hit stop. Your stop was a 2-bar high, or even up here, whichever way you look at it. Got stopped at a loss, took a hit, and took a hit very quickly within 20 minutes of opening the position. So it's almost as if went short, market turned, knocked us out. Even though the MACD was going down, remember your stop losses take precedence over the MACD. Doesn't matter what the indicators are telling you. If your stop losses are hit, they're hit, and that's that. You can't say the indicator's still falling lower and therefore I'll override what's happening on the price chart. So we get stopped out, we take a loss, we take it in very short shrift. A bad trader wouldn't have taken it. He would have waited, he would have said, let's see what the indicators are doing. A good trader would have said, damn, bad luck, had to take it. Let's just see what then happened. The market stayed high for a while, which is this level up here, and then it started dropping again. So at this point, we're probably saying to ourselves, damn, if we stayed in, we would have made a bit of money. Of course, nobody picks the bottom, and you would have seen the MACD falling, and you would have thought to yourself at that point, you know what, if only we'd got out there. Well, let me tell you what really would have happened. Of course, if you hadn't got out when this was rising, what really would have happened is you wouldn't have got out at this point either, because it doesn't hit relative profit targets, which probably would have laid around here. So you wouldn't have got out here, and then all of a sudden the market starts rising again, and you end up with a far bigger loss. So, what does it tell us? Several points as a good trade example. First of all, if you get in, and let's say in this case you went short, so you were expecting the market to fall. If your stop losses get hit, they get hit, and you have to get out, and you have to take a loss. And sometimes you have to take that loss very quickly. If you don't take that loss, then the worst case scenario is, yes, of course the market might move a little bit low, but you end up taking a bigger loss, which is what happened up here. Equally, and you can see where that's gone. Equally, you could say, well, what does the indicators tell us? Well, first of all, stop losses take precedence over indicators. That's the first thing. That's why we had to get out around here when these two spikes occurred. The second thing is, you can see this started moving, and then it just turned. The MACD was still going down at that point, and at this point, it was still going down. At this point, it was going flat. So if you looked at the indicator alone, you would still be in. Then it started rising slowly. Well, obviously you're not going to enter and go long around here, so you would have certainly missed this rise in the Dow up here, and that's fine. That's one of those things, unfortunately, and you missed lots of rises in prices, and that's because you wouldn't have entered on a MACD rising when it's already in overbought territory. I just didn't see that move. You wouldn't have seen that move. There's no reason you would have seen the move the final bit. So hopefully that's a sort of an educational part over there of a trade which didn't work out. We had a great run and rally up through this. We lost a bit of money here, and we didn't see the last part. The reason I wanted to illustrate this is because it goes through every stage of a trader's education. You got the wins, you got the quick losses, and then after the market's thrown you off, it actually even moves in your right direction just to throw insult to injury. And then you got the mistrade, a mistrade which you would not have captured in any event. That's just the way it is.